Welcome to Share Talk. Today I have the pleasure of speaking with Gaz Bisht, who is an independent consultant, and recently he's been doing some work for Empyrean Energy. How are you there today then, Gaz?
I'm good, Steve. Thanks.
Right, because it's a new company that we're covering, could you give us some brief overviews of the sort of board of directors there and yourself?
Sure, Steve. So Empyrean it has been listed since 2005, and importantly, the board and management team is more or less stayed the same, which says about the company's culture, if you like. The director, the non-executive director who's functioning as a chairman is Dr. Patrick Cross. So he comes with a lot of background in oil and gas via BP. And then, of course, later on he joined BBC. So there was a bit of change in his approach. So he has been the chairman from day one, from 2005 onwards. And he is supported by Tom Kelly, who's the CEO and managing director of the company. Tom again has a background in more commercial and financial angle, and of course he understands oil and gas business quite in detail. Then we have Frank Brophy, who is the technical director. Frank has over 50 years of experience in functioning as a petroleum geologist, and Frank has worked effectively around the world, in Asia, in Middle East, in Australia, and to a small extent in Africa and South America. Finally, we got John Laycock, who is the financial director, who has an oversight from the accounting and financial part of it. We are ably assisted by Amanda. She's a company secretary with us based in Perth. And my background is I have 28 years of experience in oil and gas business, starting in the US via North Africa, particularly Egypt. And then a large part of my working life has been in Asia, which includes Indonesia, Malaysia, and China, of course. By training, I'm a geologist, and over time, of course, I have looked at the commercial and engineering part and managed a team in various other companies. Since last July, I have been functioning as an independent consultant, and that's where I came in touch with Empyrean.
In relation, obviously, to the assets then of Empyrean, can we first of all touch on the sort of overview of the company and the direction it's taken, i.e., you've recently obviously sold a asset in exchange for a return of funds, and you're going to utilise those funds going forward. Could you cover that for us, please? Sort of the past history, the redirection.
Yes, Steve. So Empyrean, going back to 2005, had a pure exploration play in onshore Germany. And Empyrean then drilled a well there, and which didn't work, unfortunately. So after that, they focused on what is nowadays called the poster child of shale oil play in the US, Eagle Ford Shale. Not many people know that Empyrean was one of the early participants in that play way back in 2007, 2008, when they participated in first horizontal well, which was fracked and produced oil. So since then, Empyrean has maintained their small equity in Sugarloaf AMI, which is part of the larger Eagle Ford shale play in onshore Texas. And that asset has did really well for Empyrean, both in terms of financially and technically. Then Empyrean decided in 2014-15, when the oil price was a little bit on its nose, to exit that play and encash their asset by selling it. So that process happened in late 2014, early 2015. Once the sale proceed was achieved and a part of that was returned to the shareholder, A little portion was left with the company in regard to finding a new direction now going forward, and that's where I came in touch with Empyrean. So what we have done now after the sale of Sugarloaf AMI is try to steer the company into Asian market, if you like, and focus on exploration by carefully managing the cost exposure and equity holding in different assets. So that's a brief history of Empyrean from US and now current refocus in Asia.
So can we touch on, first of all, the oil projects? Could you give us an overview of them and relevant timescales, please?
Yes, so the oil project, as I described, is located in offshore China. Geologically, it is called Pearl River Mouth Basin. It's about 200 kilometers southwest of Hong Kong, and Empyrean has 100% working interest in that block, and we are quite, in a way, professionally proud that we able to convince the Chinese authorities for giving this very prospective block to Empyrean and allowed them to be the operator of that block. So that is our key oil play, which we are currently in the process of implementing the work program which we committed for that particular block. In terms of the work program, we have to acquire a 3D survey over two key prospects, Jade and Topaz, within 2 years. And what we have done is, because the seismic acquisition costs are pretty low at the moment in response to the low oil price environment, we want to use that to reduce our cost exposure, and we are in the final negotiation period of securing a company's seismic vessel for acquiring this 3D. And this 3D can start, this 3D campaign, if you like, can start as early as first week of May 2017. So on remaining with the oil project again, so what our plan is to acquire this 3D, process it, interpret it by third or fourth quarter of this year, and then take that package to the market for attracting farminees for funding drilling of 2 wells there. We remain quite confident that we can achieve this, the work program safely and within the budget, and B, once the interpretation has happened, there are a lot of international companies working around us in Pearl River Mouth Basin who will be the prime candidates for possibly attracting some farming money for drilling these wells. So that's the short project update on oil one. And we also announced yesterday, in fact, a counterbalance to the oil play in China. We have entered into an agreement with a Singapore-based company called Conrad Petroleum. And they have a prospective block in offshore Indonesia. The basin is called West Natuna Basin. And it's pretty interesting play, quite different to what we are doing in China. So our equity can be as high as 20%, depending upon the payment from now till May, or as low as 10% there. What it is doing to our portfolio management, if you like, is trying to balance oil with gas, and it is trying to balance the higher equity in China with a smaller equity in Indonesia. And in terms of the work program, seismic program versus the drilling. In Indonesia, the drilling could happen in last part of this quarter, current quarter, Q2, or early Q3. So the target in that drilling campaign is a small, shallow gas play, which has been confirmed via 3 existing wells, the presence of gas in shallow reservoir. What has not been confirmed is the flow capacity of this reservoir. Now that's an uncertainty which we will be trying to address via drilling this well and conducting a modern testing program. so that we can establish this reservoir is capable of flowing commercial rate gas. And if that happens, then it will help us to map the next step. So in a summary, so what I'm trying to say that, the company has carefully selected these assets, maintained with wide eye open, as they say, the larger equity in China and a smaller equity in Indonesia. And from work program point of view, 2017 looks pretty active for the company, both from a drilling, and you can imagine, once a large amount of data is acquired, drilling and testing, the analysis of that itself will take about 3 to 4 months. So I think the team is going to be quite busy in 2017.
So in terms of the news flow, you've got obviously the drilling going on the gas prospects within the next few months, and then you'll have the release of the prospective oil target plays in the Chinese asset.
That's correct, Steve. So it's pretty exciting time.
If we can have a quick sort of chat, if you like, about the sort of previous gas discoveries. Obviously, they were drilling originally for oil at the Mako, which is obviously the gas play. And although they intersected the gas zones, they weren't actually flow tested.
That's correct. So Mako structure is a large structure which has 3 existing wells. And these wells have been drilled as early as 1979 and 86. And the last well was drilled in, if my memory is serving me right here, in 96. So if you recall, in larger part of Asia, gas had no value back then. So these wells were primarily targeting the deeper oil play. And in route to the oil targets deep down, they intersected this shallow gas, which, obviously because of the commercial angle, wasn't tested back then. The oil part didn't work, unfortunately, for the companies who drilled these wells. But what it gave, a good data set, although it is pretty old data set, it doesn't have the full suite of logs, it doesn't have the core, and doesn't have the reservoir properties, if you like. But it did give enough confidence for us and Conrad to get this permit in their fold, if you like, and having this geological risk addressed to a large extent. So the way we are looking at these existing wells there, that they have addressed the geological risk adequately on route to the oil play deep down. And we think that we feel reasonably confident, if you like, that the gas is there. Of course, there is risk in this business all along, but these 3 wells do give us that warm and fuzzy feeling that there is gas. Now, one of the risks here or uncertainty is that these reservoirs are not very consolidated one, which means you got to test them very carefully, and that's where the new technology that has come since late 90s to now, primarily from Canadian part of the business. That's what we're going to use in these wells in testing them. And we remain quite bullish or confident that we will be able to conduct a reasonably safe, under budget operation on testing these shallow gas targets.
Now, in relation, obviously, to the market cap of the business, round about the 10 million mark currently, when you have a look at your prospective targets in relation to other companies that might only have one play targeting oil or doing sort of well workovers, what are the sort of company's directions going forward to try and obviously close the gap between where your current market cap is to where it potentially should be?
I think management is aware of this gap you are referring to, and one of the things we will be doing going forward, and when I'm saying we, means Empyrean will be doing going forward, this is maintain the news flow and activity log, if you like, from bringing it to the audience like your audience or more having more road shows, if you like, to bring this information into the wider media for addressing what we are doing. We are now, having sold the US assets, we in a way have become really active company now. And 2017 is going to be the foundation year for this company going forward, what shape it will take. So to address the gap from where we are versus where we should be or could be is a area which board is squarely focused on, and we will be doing more and more road shows and information flow through so that wider investor community can understand what we are trying to achieve, and hopefully they will appreciate our effort in that direction, and the market cap will get readjusted accordingly.
And hopefully we'll follow you along that sort of journey there, Gaz. It's been a pleasure speaking to you. Thank you very much for your time today, and I wish you and the business well.
Thanks, Steve.